Hello traders, welcome to another part of Bad Forex. Today we are going to talk about a very important topic. The thing that separates real traders from the rest is the ability to recognize the correct trading setups. The chances of those situations that have a high probability of success, that is, the best opportunities in the market, require experience, practice, and
If you trade
like this without knowing exactly what you are looking for, it can easily cost you money and the result is nothing but a series of losses. In this part, let's examine the main factors and rules that can help you find the optimal trading setups using the smart money concept. In addition, we are going to a series of special scenarios in the market. When you are SMS traders, it is not a very good news for the others. In fact, you should be one step ahead of the market, so stay with us until the end of the video, because you are not going to hide your secrets until the end of the video. If you like this sub, be sure to like the video. And if you are new to our channel, don't subscribe. Let's get to the point. Bro, in order to be able to find a trading foot with the probability of success in the market, we must look for the foot. We must be very important. The first and most important factor that we should always pay attention to is liquidity. The market is constantly seeking to attract liquidity so that it can move. In fact, liquidity is like blood in the shelves of the market, a key action that adds to the entire structure of the market. We can divide liquidity into two general types, static liquidity and dynamic liquidity. So I will give a quick explanation of each. Static liquidity means those specific areas and markets where a lot of money is stuck, such as the place where all stables are placed or buy and sell orders that are waiting to be executed. When a trader withdraws from the transaction with the stables, the market actually freezes that amount of capital. A common hypothesis among traders is that central banks or large financial institutions may manipulate the market, so that the traders are deceived and they have to analyze the price movement correctly, while in fact they are falling into the liquidity trap. In order to run in the market and remain profitable, it is very important to identify the level of leakage on the chart. The ones that have collected a large amount of orders, they can give you a good picture of the market and prevent large particles. We can find liquidity in different parts of the four prices, for example, below the lows, above the highs, on the trend lines or dynamic channels in the fields of supports and resistance. Resistance and support zones and Fibonacci retracements are daily candles. Now it turns out that it is important that before the price reaches the area that we think, we should look for an ergo liquidity swap. This symbol shows that the market is limiting liquidity, and this can be a violation for the strength of resistance or support that we have identified. We use liquidity sweep as a confirmation before entering a position. There is a mystery behind this. The market needs liquidity to move. If the price does not collect liquidity before reaching the target area, there is a very high possibility that it will use that area as a platform for liquidity to make its next move. As we said, the second type of liquidity is dynamic liquidity. Dynamic liquidity means those factors that determine the direction of market movement in simple time. Simply put, the things that make the price go up or down. In the discussion of dynamics, we have dealt with two main factors that always affect the price issue. Internal causes and external causes of price movement in the market are always between these two: liquidity and the flow of internal liquidity and external liquidity. You can think of this as a cycle in the middle, where the price constantly moves between these two. Sometimes it goes from internal to external and sometimes vice versa. In our previous videos, we talked a lot about the concepts related to Miganji, but you can also watch these videos in our playlist. If you haven't seen them yet, definitely take a look because it gives a better understanding of price behavior and liquidity structure in the Forex market. Now, if you understand that we have found a better one than the dynamic one, it's time to go to the second AML, that is, market structure or the same base structure. Here, we want to check in which direction is Gamut likely to move and what is the dominant trend of the market. Is the market in Saudi moving or declining? For this, I will start from this and check the overall structure of the market in a higher time frame, such as 4 hours or 1 hour. What is our goal? Find the supply or demand area that the price has not yet reacted to, the one behind the price and the one ahead of them. This analysis helps us understand which side of the market has the upper hand now, supply or demand? And this is a very important point that we have to approach carefully because we can find points with a high probability of return with Cash and a valid return ergo that is less likely to be deceived. In fact, this will help us not catch clear signals or false changes in the market and not make a mistake against the flow of trading. For example, let's assume that the structure of the market is bearish, i.e. the seller and the controller of the market have set the price for several downward biases, and along with it, they have created specific price zones. Now, in a right scenario, the price starts to move up, it shows a small reaction from the last supply area, and then the price breaks that area and closes above it. This is exactly one of those repeated scenarios that can be seen many times in the market. Many new traders who are not yet able to recognize the structure of the market correctly, when they see such an upward movement, they quickly think that they are dealing with something more expensive. It means that the market has changed its direction, and now it's time to take a buy position. They think that the downward phase is over and this new tube is a powerful tube. Therefore, they usually place their bets correctly because this tube is used. But contrary to their expectations, the price will make a small movement upwards. In fact, it will touch the supply line and then execute its downward trend. Now the interesting thing here is that many people don't even understand why they have lost their jobs, and unfortunately they repeat this mistake over and over again. Something that is missing here is a key point. You should not enter a buying position until the price reaches a large and unbroken zone in the time frame. In fact, what they thought was a change of character is not valid at all. The price just moved up to the tip of the line to touch it, and used that tip as an inducement to collect more liquidity and get energy to continue moving. The downside of this scenario shows very well that if you don't have a correct understanding of the base structure, the possibility of poisoning is very high. Experienced traders could recognize this very easily. If they have a better understanding of the market's emotions, then they will realize that the ginger fiat is actually a fake signal because the price is still in the zone. In fact, the demand for tantrum was not high, so now let's go to sub-ML, the time of entry into the transaction, that is, the time of the day or week when it enters the market. When you work with a longer time frame such as 4 hours and 1 hour, you should be aware of how close you are to the weekend. In addition to the time of day and trading stations, it is very important. An important point, it is better not to go to the neck treat at the last hour of the day's deals, especially on Fridays. In these intervals, liquidity usually decreases, spreads go up, and this means that more coins enter into transactions. Now imagine a scenario. You have found an excellent and flawless setup. Everything is compatible with your reading plan, and it seems excellent in terms of the probability of success. The price is reaching the area that you specified, and your stable is quite small. On the surface, it is an ideal position to enter, but here is the point. The market does not have the necessary momentum and liquidity. It is possible that this situation occurs in the last hour of Friday, or for example the Asian session, or even the last hours of the night such as the night dose or 5 in the morning, and the result is that the success rate is very low. So if you want to enter at the right time, you should know how the market behaves in each part of the day. So far, we have completely checked what factors we should consider in order to find successful setups. Now let's go to the ideal trading scenario based on smart menu cancel. In the first ideal scenario, suppose you entered the market at the right time of the day, where there is both utility and momentum. You have carefully checked the market structure, and you have given the general price bias correctly. You have also carefully checked the market structure, and you have correctly given the general price direction. All these factors show that we have a good situation now. In this scenario, the price is in a downward trend and the market is gaining control. In this scenario, the price has recently broken down from the previous level and left a significant efficiency behind it. At the same time, A new currency zone has formed on the Zerum zone. The most important thing is that this area should remain stretched. After the first downward movement, the price came back up again, and just below that area, XRIM formed two equal peaks. There is a strong liquidity of money here, and this issue becomes a vital point to confirm the product setup. The existence of a liquidity of money close to the point we chose greatly increases the probability of the price returning from that area. Before entering into the transaction, we must find the liquidity of the pattern that happens before the price reaches that region. Why is this important? Because the traders who place buy orders or have stables in this area are actually providing the necessary support to continue the downward movement of the market. As we said before, we use sway liquidity as a confirmation before leaving. What is the mentality behind this affair? If the price does not sweep the liquidity area before reaching that area, there is a high possibility that the area itself will become a liquidity place to get energy to continue moving. What happened now after the formation of eagle highs? The price put downward pressure and broke the recent levi. In fact, a new BIOS was registered. But here is a point of coefficient. It is not necessary for the price to go down and not to exhaust the tension and then go up. This neighborhood is not necessary because it is inherently unpredictable to accurately predict when and where the price will return. What we expect in this scenario is that the price will make an upward movement and sweep the accumulated liquidity. Now after the price, it entered our zone, it clears that zone, and then it goes down and continues its downward trend. Here, we have exactly an ideal trading setup that we can use to enter the market. With the help of different entry models based on the smart money concept, I explained them completely in the previous episodes. If you want to analyze the chart, this generation is one of the main trading opportunities that you should always look for. Now let's go to a real example of this scenario. Here we have the 1-hour time premium of the Euro-USD pair. It is clear that the price is in a downward trend and the control of the market is in the hands of the width. If we focus on the top of the chart, we can see that the price has broken the previous structure with strength and left behind this big option. After this correction, the price moved downwards again and created another bearish break-off structure, with which another currency zone was formed, and the price returned to the last currency zone. And in that area, by making two peaks equal to one liquidity, he created completely clean money. This existence of liquidity right below the currency area that we specified increases the probability of the price return from the same area. Now look, the price has made a return move up and used that last currency zone as the inducement zone. At the same time, high liquidity has also swept equal highs, so exactly the reputations we were looking for are formed. Now, the only thing we have to do is to wait until the price enters the same area and becomes our extreme value. It is at this point that we can make a boss position by masking the different entry models that we explained in the previous episodes based on the smart money concept. For example, if you want to enter with the active entry model, you can place a limit exactly on the lowest point or zone. Or if you prefer a more protective style, you can trade so that the price forms a series of reversals, such as change of character on the time frame, current or lower, and finally, we enter the transaction on a lower time frame in order to have a better entry margin, because in this case, the slope pass becomes much smaller and more accurate. This is exactly the type of ideal trading setup that we are always looking for to enter the market. The same logic applies to Saudi scenarios. Now let's go to the second optimal trading scenario that we would like to see in the market. We have this structural picture that we want to check. Let's assume that we have a downward trend in which the price has created several break-off structures. After the price closes a break structure and creates a supply in this area, it returns to the same price and touches that area. This is where a price reversal occurs, and then the price starts to move downward in this direction, leaving a significant efficiency in the cup, and then a bearish circuit is formed again. What does this mean? It means that the control is still wide and the downward trend continues. What is the next step? We are looking for a consolidation phase, for example, the construction of XAUUSD, we want the price to form a specific liquidity sell-side in the lowest area. If we take a look at the chart, especially on the left side, you can see that the price has already come and swept an external liquidity. Now it's time to target the domestic liquidity price, which is exactly the same fee value gap that was established immediately after the first mitigation. In the next steps, we expect the price to have an upward movement and to fill the liquidity vacuum that was frozen before, and then it will enter the horizontal zone and become untouched. Now it's time to go to the time frame of the pointer and look for an indication of a change of character or price reversal patterns. Our goal is to find an optimal and safe entry point. This scenario is one of the safest trading setups that works in many cases. Now let's look at a real example together to get a better understanding of the concept. Here we have 4 1-hour wide pairs of the pound-yen. The price came and Kangi stepped on the fin, then he did a mitigation from the tag haze region and came back down with strength. While leaving such a big fan behind him, if we look closely, this move is exactly our first ideal trading scenario. A liquidity section has been created just below our exchange rate zone. What happened next? The price has gone up, it has attracted the anger of its followers, and then the high value has returned from the same area. If we were mentoring this pair, this is exactly the point where we should have made our first entry. But when it came back up, it didn't reach that new width area, it just made a small correction and went down again. What does this mean? It means that the control is still in the hands of the width areas. At the same time, the price has come down, but a clear and clean money liquidity chain has been created under this equalizers. In the following, the price made an upward movement to fill the previous internal liquidity, and then, after completely hitting the width zone and breaking it, it changes its direction and moves downwards again. Well, now you can enter the Prosh position, after we have identified your ergo estimate in the lower time frame. Now let's enter the ideal trading scenario. We have a downward structure like the one shown here. In this scenario, we want to see several key events. First of all, the price must bounce back from a currency zone in a higher time frame. For example, a point of offense right in the 4-second time frame. We are looking for the creation of a large block camp, which is detected by a candle with a large body. In the future, we are waiting for the price to go down, and it will be confirmed that the market has won the control of the width of the miners. Since the price is making a low, which means there is liquidity for the purchase, the price will return and go up. I will fill in the Jamund and touch the final large art block. Now, pay attention to the fact that the price of the upward movement of the Saudi position changes its direction towards the upper art block, which makes art block bullish. It should be created. Now what we want to see is that the price will increase in the area of black flower and return to that area without spending more than necessary. In this scenario, it is very important to identify the gaps that are created inside the candle that need to be touched. After that, the price goes down and creates internals that indicate the liquidity buy side. Then let's pay attention to how the price behaves when it gets close to the bullish of the black market. We expect the price to return from the same black market and start a profitable move. After this move, Citi uses the last area of width to activate the sell position of those who have taken the previous demand area and to sweep the liquid side that is above or the collected internals. Finally, it should enter the big black market, and after an acceptable mitigation, the price will return and move down again to the sell side liquidity, which is located at the bottom. To take advantage of this scenario, when the price enters the big black camp, we should go back to the lower time frame and look for signs of changing character by the price. When we see these signs, now we can open our own selling position. Now let's look at the price chart and see this scenario in action. Here, the 1-hour Jeff chart has the euro-dollar currency. First, the price until it reached the price range of 4 hours, it did not show its effect and returned. After that, the price created a few jacks by breaking and closing under the previous structure. Now the price has returned to the top again, and I will break the block camp formed by the same Chan Jab Gractor, and the price continued its downward movement and created another break-off structure. Also, a large noisily black herd was formed here, which was not yet released. In the continuation of the price movement, we see that the price moved down and left a significant efficiency. The price continued to move in a negative direction and broke out of several of his structures, which confirms that the direction of movement has changed and now supplies are taking control of the market. Until it reached this point where it encountered resistance, it turned back and created a bubble, which caused the formation of a liquidity chain. After that, the price turned its direction and started to return to Saudi Arabia, although it touched this order block, but it could not completely touch a major part of it after this short-term downward movement happened. After bully crowned the block, the price returned and moved up and used the last level of supply as an inducement, a move that activates the bankruptcy of traders who started from that level. In the end, the price goes to Arbala again, which is big in the final zone and touches it. After that it does a reverse. After this, a noticeable reversal happened and the price moved down strongly and strongly moved towards the liquidity zone. This trading scenario has a lot of news, which includes more precise points for entry of Umar with a high win rate and a higher payout ratio. Also, this scenario provides the most suitable time to enter the market and filters the entry of the high risk. If you have watched this video and it was useful for you, don't forget to hit the subscribe button and activate the notification to be informed about our latest videos. We welcome your feedback and suggestions, so please leave a comment under this skin and suggest the topics you'd like to cover in the next videos. We appreciate your support, and we look forward to seeing you in the next episode.